got Parag Thakkar joining us, head, of course, of head fund manager at Fort Capital. Thanks so much, Parag, as always, for taking the time. Parag bhai, we've been talking about this in the run-up to the announcement. First of all, did you anticipate that it would be wrapped up in one day? And second, what, according to you, is the most important sector to focus on?
So I think full marks to government. Full marks to government. They've worked so hard on it, and very quickly also. And plus the sentiment with which it has been done. It has been done to really benefit middle class and a common man. See, for example, toothpaste, hair oil, shampoo, soaps were at 18%. So no FMCG analyst also was expecting that this 18 will be reduced to 5%. But this is a common man need, right? Yeah. So I thought that it will, they should do it, and that's why luckily I bought HUL, Dabur and Marico's of the world, where this 18%.
There's no luck, only the wise are lucky.
Because it was actually very common sense thinking that government...
And this is something we've been saying. For our regular viewers, this is what we have been saying, that the intent is very clear.
Yeah, intent is very clear. It is not just to reduce that 28 to 18, it is to benefit common men.
Yeah. And the boost that the revival in terms of consumption is the key from here on. Do you think this will lead to an earnings upgrade as well, Parag bhai, from here on?
Definitely for some sectors, for sure. For example,
name them off the top of your head.
So basically, top of my head is auto, where M&M, Maruti, TVS, all these guys will benefit. Tire companies will benefit the most in my view, because 70% of the sales is aftermarket.
Correct.
So some benefit in margin will also come.
Why tire companies more than anything else? Because of the GST?
Because the GST has reduced. 70% of tire sales happens in aftermarket. In aftermarket, when you are going to buy tires, you are not going to ask for exactly that, whatever reduction the GST has happened, they'll reduce the price exactly that much.
They can keep some.
Once they'll reduce it, they'll gradually move it up also, in my view. Plus, rubber prices are falling, oil is at below $70. So I think the tire is a hidden big beneficiary in my view.
But it's already run up, right, in the recent past few.
Yeah, so that most of the sectors have, of course, except for ITC, something like ITC, which has not run up, because there it was expected that tax rate will go up. In fact, there also there is a positive surprise.
Which is?
Which is, there is no tax rate which is going up. Yeah. Right now, in fact, is benefit, because if you include cess, the tax rate was above 50%, 53%.
No, but Parag bhai, the cess stays for now. The compensation cess as of now stays till those loans are cleared, which is at an unknown date.
Yeah, and plus the other thing is that government has said that incidence on tobacco products will remain same. Yeah. So I am not expecting any benefit for tax rate to reduce for ITC, but at least it is not going up. And why I took name of ITC is very simple, because going into the event, ITC has not moved.
Correct. So the negative implication that could come in as a negative surprise has not come in, and that is what.
And plus, stock has not moved, because when he asked about the tire, most of the auto components or tire stocks have gone up. So ITC is something which has not gone up.
Okay.
And
so no
remember, FIIs are heavily short on Nifty. All Nifty stocks which have not moved, or where FIIs are short, and where this benefit is going to come, will ultimately give highest returns. So not today, not for today I am saying.
Correct, but so
for example, banks,
FIIs will start coming back.
For example, just to take name of HDFC Bank, biggest Nifty weight, not gone up in the run up to this event. They have 15% of the loan book in rural and semi-urban areas.
Correct.
They have very high exposure to auto. Cars, for example, if car sales move up, because 8% GST has come down, if car sales grow by double digits after a long time, HDFC Bank, not only Maruti, M&M is going to benefit, HDFC Bank is also going to benefit.
Shriram Finance, big on auto loans,
So I'm saying high weight Nifty stocks which have not moved in before the event and are going to be the beneficiaries.
And Shriram Finance has been an underperformer. In fact, we did a deep dive as to why that stock has been ruling under pressure.
Maybe you'll see
probably a recovery in today's session.
In the short term as well.
This is the day, if you've been sitting on dry powder, this is the day to open up your checkbooks, get your apps all fired up, because this is going to be an exciting morning. 136 points. I don't know if this is a muted version of what we'll see. Question is, will we see a sell-on rise? In the middle of all of the GST news, there's a lot more happening. We showed you that on our watch list right now, and we're looking at a pop up, a gap up when we open of about 145 points. Shrikant Chauhan joins us this morning in the conversation. He's Executive Vice President and Head Equity Research at Kotak Securities. Of course, Vineet Polishkar remains with us. Parag Thakkar in our studios. Shrikant, very good morning to you. Up and away, or you see a sell-on rise as far as the markets are concerned? What are the levels you're seeing for the Nifty and the Bank Nifty?
Yeah, good morning, Tamanna. Good morning, everyone. For Nifty, yes, we are expecting further upside in the market. The way there was gradual consolidation at the lower base of the market, we were of the view that the market is preparing for the levels of 25,200 again. But the real strength will come when the market will cross the level of 25,200. Till then, we can be more on the stock specific side. But broadly, I am of the view that 24,500 is now going to act as major support for the market. And in case, because of any reason, market breaks the level of 24,500, then that time it will be a very, we can say, concerning factor for all of us. But I am of the view that the market is on the verge of crossing 25,200, and later on we may even see the levels of 26,000.
Do you anticipate in today's session and tomorrow, because of the amount of shorts that were in the system, that some amount of covering will take place if we see a massive move on the upside? And will that add to the rally, Shrikant? And also, what individual stocks are you looking at this morning?
Yeah, good morning, Alex. See, yes, definitely short covering will come because now there is hardly any major event to come in the market. And this particular event is also very big enough because the way there is a news flow in terms of fundamentals, I think there was hardly any major micro analysis. We were of the view that if something comes more on the micro analysis side, then it will impact the market. But if that is not the case, then we are of the view that we are going to surpass the entire bearishness which was there in the market since last, we can say, almost 2 months. And also today it's a day of weekly expiry for BSE options. So broadly, we are of the view that we are heading higher. And in case if there is any correction because of any reason close to, let's say, 24,800, 850, there we should look for taking some long bets in the market. Stock specific, we like NBFCs specifically because there we can expect renewed buying interest. We like Bajaj Finance, which is around 900 sort of levels. There we are expecting 1,025 on the higher side. We can keep a stop loss at 875 for creating any long position with a very short term view. So 875 should be the final stop loss. And we also like Gravita, which is around 1,700 levels. And based on the overall news flow, as well as its technical formation, it is available at very decent levels. We can keep a stop loss 16. We can keep a stop loss somewhere close to 1675 for the target of 1850 on the high side.
Okay, so since today is a bumper day, then just two will not do. Shrikant, I think we'll have to go around because, you know, I'm thinking people who are watching this right now want to understand how to make this GST portfolio. And what to put in it. So I think we should give our views over there, of course, with the standard disclaimers, etc. But Shrikant, all right, from the GST perspective and what has been announced last night, what do you think are the 2 or 3 stocks you should look at?
See, like Bank Nifty was under a lot of pressure. It was finding difficulties to sustain at higher levels, and FIs were like consistently selling. Now, because of this overall development, we are of the view that we can see some short covering in bank stocks. The major shorting was in the bank index and bank related stocks. So there we can expect further upside. We like PNB, we like Canara Bank, we like State Bank of India from the PSU bank space. From the private bank space, we are always like bullish on HDFC Bank, ICICI Bank. So they are also available at reasonable valuations. So we should be like a buyer in stocks like ICICI Bank at current levels. As I mentioned, we like PSU Bank. So in that specifically, Canara Bank should be on the watch list.
Okay.
From the consumption space, or we can say from the two-wheeler space, we like Hero Motors as well as Bajaj Auto, but I think Bajaj Auto is the stock to look for. Here we can expect targets of 9,200, 9,300 on the higher side. And also from the insurance space, we like HDFC Life. So there also we are bullish and we have a target of close to 850 plus.
All right, I asked you for 2, you've given several more. So that's great. It is a day of bumper, gifts in that sense.
Yeah.
Star Health, 15% up. Pre-open session, first 3 minutes, so keep that in mind. Campus Active, you know why? Because GST on footwear has just dropped drastically. So a lot of these brands which were facing competition from unbranded products, but our Campus Active is now going to see that pop. But insurance is the big one this morning. Star Health, SBI Life, HDFC Life, ICICI Lombard, ICICI Pru, LIC, everything you look at is looking huge. Niva Bupa Health. I cannot take my eyes off what's happening with an HUL. Just pull up an HUL, Hindustan Unilever. When have you seen HUL with this kind of a move?
Yeah.
Okay.
Was it after the results?
Vineet Bulinjkar, top 2 or 3. Top 2 or 3 picks this morning with a GST perspective, and then I'll come to Parag bhai.
So I just told you about insurance. I like Adani Cement for the same. We like Ather Industries. Ola has already moved up. Ather is also shaping up quite nicely. I think that will do well. We like Maruti. Best play on the consumption space. Bajaj Finance. I think if there's any stock that one should be buying is Bajaj Finance because they cater to the entire consumption space. So these are some of the top 3 stocks that I like.
Parag bhai?
So M&M clearly.
What a winner for M&M.
Yeah, what a winner.
Because, and
Tractor,
that
GST cut, SUV, they have been benefiting.
No, and also can I just say, this was day before yesterday on the closing show, there was a news wire that broke the story that EV prices could go up.
Correct.
We said again and again, and if anyone wants to go back, all our feeds are on YouTube. If you've listened, you know we said again and again, hang on, this is a proposal. It's unlikely to happen.
Yeah, correct.
It's unlikely to happen, and look at the upside today.
No, fantastic. So tractor, SUV, entire portfolio, I think. And as you rightly said, there were some doubts that EVs, electric SUVs above 20 lakhs will attract higher tax, and that has not come. So 60% of the portfolio, in fact, is now gone to 18% from M&M. So M&M is clearly a big winner for me. Medium to long-term perspective, not strictly today, tire companies and banks. See, again in banking, I will stress upon the fact you have to bet on only prudent ones. It is not just one-day thing. So you have to buy HDFC banks of the world who are well spread in rural and semi-urban areas and well penetrated into auto dealerships and consumer durable shops. So they will, and now their CD ratio has come down. Now they are ready to grow. So I think this festive should start the growth path.
Interesting. Okay. All right. It is 9:06, just after the time that we normally get you our big brokerage call of the day, and it's an interesting one today. It's in the EMS space, and Harsh joining in to tell you what Macquarie is saying about them. Harsh, I think the positives today are pretty obvious. What else are they saying?
Well, yes, what they're saying is it's a $1 trillion opportunity, and therefore the growth path is extremely strong where some of these EMS plays are concerned. They've put out a pecking order, and of course some of those target prices reflecting on your screen, but the pecking order that they prefer is a Keynes Tech, Avalon, Syrma, Dixon, Amber and Cyient in that order. They believe that Keynes really stands out within that pecking order. And of course, the others also are interesting bets. Something like a Dixon also is what they see as a near 20% upside from here. So interesting names, but of course, the larger story, of course, not exactly with regard to EMS, but
the stock yeah, I agree. The stock you're showing us is 1% up in the pre-open. I mean, we're looking at rock and roll right now. Look at DOMS about 8.5% up. Harsh, if I still have you, and since you look at insurance very closely, do we still have Harsh? Okay, we'll try and get Harsh back because he looks at insurance very closely, and there was some kind of concern on input tax credit. Clearly that concern is not really showing right now because you've pretty much made all individual policies at 0 GST rate. What about the input tax credit concern? Any views there?
So you're asking about insurance. So basically my view is very simple, that if you are a term insurance buyer or an investor in a life insurance product, your IRRs go up, right? Because as a customer, your premium payment will reduce to the extent of GST. So that way your IRR is going up, and that way it is easy to sell now. It will be sold aggressively, in my view, as an investment product, insurance, from here on.
Okay.
Of course, they'll have to increase the suppose 100, which was now which was up till now charged at 118 to you, will now be charged at 104 to you because of that input tax
But
credit.
it's still a big drop.
Yeah.
Harsh, just on the math, and I know you've been looking at these calculations since this morning on what the impact is for insurance companies. Clearly, the street is looking at it very, very positively from what we're seeing in the pre-open session.
Well, yes, it's a 15% straitjacket discount. So really, essentially, it's going to be a play on volumes from here. Whether that 15% discount straight up will likely drive volumes, well, a couple of brokerages are playing wait and watch on that one. But of course, the street obviously seems to be penciling in bullishness. When you're looking overall at the input tax credit piece, of course, we'll have to wait and watch as to how much is that impact going to be with regard to the cost structure. Certain commission payments, for example, on which GST used to get knocked off against the GST payments that some of these companies used to make, will not be allowed to be knocked off, which will be some portion of, especially for life and health insurers, of course, catering to individuals, will obviously see a bit of an impact. At least among the larger life insurers, HDFC Life has the largest composition or exposure towards individuals, and therefore you might well see a larger impact on some of those names. LIC has a larger chunk of group these days, and therefore you might see a slightly lower impact where LIC is concerned versus an HDFC Life.
Okay, so insurance is looking good. We're speaking with Niva Bupa in just a short while from now. So you're going to get that perspective as well of what it means for insurance companies. I'm just very happy because my next premium is for the year is due after September 22nd.
So there will be some bit of a downtick that could come in on that one.
Oh, massive one.
But you know, I think one thing, Tamanna, from a broader perspective, you need to understand is that from a fundamental perspective, you have your GST reforms that have come at play. How important is it going to be for the FIs to go ahead and cover their short positions right now? Because that is what will probably take you to that 25,000 plus mark on a sustainable basis, right?
If FIs are not feeling FOMO today, then I don't know. They have been exiting the other way, but very good point here.
Yeah, and I think Srikanth would be the best one to respond to that as well. Srikanth, FI short covering, a much needed thing. Do you think they will come in a big way, taking into consideration the market moves that we are seeing right now? Because earnings improvement is the key from here on. And how important is it for the markets to close above that 25,250 mark for that trend to change from here on?
Yeah, definitely what you're saying is absolutely right. And we need to see that whether they comes to cover short their short positions or not. Because in the past also, like few days back when there was announcement of this GST and all, that day also they have not covered their positions. So after maybe the announcement, there is hardly any major change. So why they are so much short on the market, it is very difficult to understand. But yes, today, in case if we see the market is sustaining comfortably above the levels of 25,000, then definitely we can expect short covering in the market, because 25,000 is the level where there is a pain price, and crossing this level should trigger them shorts unwinding of short positions. So yes, 25,000 is the important level to watch out for. But I am of the view that the market has spent a lot of time at its important support levels like 24,500, 600. Despite several hammerings around those levels, we saw market rebounding because of some or another reason. And now, based on the flows, I think there should be short covering from FIs. And in case that comes and market, see, the critical point to watch out for is 25,200, and crossing this level will definitely suggest us that will give us an indication that the markets are heading higher towards 26,000. So 25,200 I think is the level above which we can expect short stop loss of almost all the short positions in the system.
Those who are getting stuck with shorts today, I don't envy them at all. It's going to be a tough morning for them. Parag bhai, this is time for FIIs to also maybe move back in and re-look at their positions, because this is the big boost, right?
Yeah, absolutely.
This is the antidote. This is the antibiotic to this tariff problem.
100%, absolutely. And tariff, see, the net, the entire negative impact which we were expecting due to tariffs, the first order impact, the second order impact, to some extent gets nullified with this. So I would say that let's hope that they don't wait for the tariff situation to improve significantly from here. Let's hope for that. But I would say that this is actually a good event, and as you rightly said, this is an earning growth driver. For example, in FMCGs, for example, if they don't, they'll increase the grammage. So what everybody is looking at in that volume growth should come back. That might come back in second half.
That might come back in the second half. So categorically, we are saying that earnings will start improving post-December quarter. And from here on, the management commentary is going to be key as well. You know, we've touched base on all the segments so far. You know, every segment is firing, from consumption to your insurance pack, your auto companies. Let's just pull up our Varun beverages as well, because the kind of double whammy impact it has on the back of water, where there is a cut. And if you talk of carbonated beverages, where we are talking about a 40% duty, and that is what a Varun beverages is reacting to, a 2% downtick on that one, Tamanna.
You know, but the incidence of tax doesn't change as far as the carbonated water bit is concerned. So, because net, all of those things are going to be the same. And that's why you're not seeing too much of a downtick, perhaps. And some of these things, frankly, have inelastic demand. We might not see an impact on pharmaceuticals, for example, but huge cuts over there. Something which is going to impact people's lives. Cancer drugs, the kind of GST on it has dropped dramatically. All of these are important moves, and some of what you're going to see in the market today is, yes, stock specific, but also the overall sentiment, because people are going to play the Nifty. And there you have it. Quite a sight for sore eyes, I would say, after the kind of meandering market that we've had for the last several weeks. 200 points nearly up on the Nifty. Will we stay above 24,900 convincingly, I think, is a question for Srikanth when we finish this first bit of presentation. The Sensex also about 0.25% up. Bank Nifty about 0.5% up. Can you stay from here? Will you move forward? As you know, especially the closing session today will be important, but as more investors come in is the question. Let me pull up the heat map as well for you on the Nifty. Let's start with that and see what's happening there, and then we'll get to the broader indices. I mean, it's all auto, isn't it? Auto and finance. Look at what's happening. This scaremongering which took place, that electric vehicle rates above 20 lakhs, the GST on it will go from 5 to 18%. Well, that has been countered effectively, about 6.5%. M&M revving forward there. Bajaj Finance. Now, why Bajaj Finance? When you have an appetite burst for consumption and you need to go and take loans, where are you going to go? So that's why Bajaj Finance there. Aisha, in spite the above 350cc Royal Enfield bit hurting, but other aspects of the business really going to get a boost over there. Nestle, obviously, HUL, 2.5%, Ultratech, cement, everything on the consumption basket. Even ITC, because simply, even though cigarettes will be taxed at the same rate, everything else benefits. On the downside, Eternal. Now, there's a Jeffries note which says that the GST of 18% on services will be a negative. But having said that, the GST on services was always 18%. And there is an input tax credit element as well. So I don't know why it's being seen as a bit of a negative. Maybe it'll come off. It's coming off its highs also after they increase their platform rates. Likewise, for RIL, I would say NTPC, not too much red on the screen, but this is not a full green screen either. So keep that in mind. I want to pull up the India VIX, which is a tick up right now. So yes, there is a careful celebration, I would say. A lot is going to matter in terms of implementation going forward. Just here, we'll come in on the specific stocks in the broader markets as well, because I think that's where the action is also going to be today.
Absolutely, because if you see mid cap and small cap, similar gains, 0.7% higher is what you're seeing in terms of where your broader markets are concerned. Let's quickly look at the sectoral heat map as well, because that will give you some bit of an idea. But before that, the GST revamp boost, you're talking about a Bajaj Consumer, Colgate, HUL, all seeing some smart moves today. Colgate hogging the limelight. Apart from that, Godrej Consumers, Dabur and PNG Hygiene. So Dabur again is the highlight on this one with gains of around 4% coming in there. Imami, Marico, again, marginal moves there, but still trading in the positive. And it seems, you know, with the kind of moves that you're seeing in terms of the consumption pack, that the gains are somewhere priced in because that uptick is in that range of around 2 to almost 4 to 5% in trade. Moving on, if you see in terms of Parag Milk, 6.5% up move coming in there, and this is mainly on the back of dairy as well as cheese when you talk about that aspect. Varun Beverages is seeing a negative reaction. You know, Tamanna did mention that the 40% does remain there, but the concerning area over here is going to be that the raw materials that they procure, that comes in at around 18% versus the outgo of tax, which happens at 40%. So that differential is going to be something that probably will hit the margins, and that's the reason why you're seeing a downtick of around 2.5% in terms of Varun Beverages. Moving on, cement, good moves, 2% up move, Ultratech, Ambuja, strong moves there. If you talk about the other names as well, trading in the positive. Shree Cement, ACC, 1.5% up in trade. Tire companies also, as Parag Bhai was mentioning, Siet is seeing higher moves, 3% upside on that one. MRF also in the positive. Apollo Tire is another one which is seeing gains of 1%. Again, if you talk about the footwear industry, Campus Activewear, 7.5% up move, and this is taking into consideration anything which is below that 2,500 mark. You're seeing boost coming in on that front side. Likewise, Relaxo and Metro Brands also seeing some smart moves in today's session. Auto companies, let's put up those ones. M&M is an outlier. Escorts on the back of tractors, 12% up move on Escorts and a VST tiller. So all the three which have exposure in terms of the tractor segment are seeing some good moves. Tata Motors and M&M, as we've already spoken about. Let's look at the other screen. Two-wheeler space also, no major upswings coming in there. Marginal gains in that range of 0.5% to 1%, but it's TVS and Eicher, in spite of having that overhang of above 350cc, is seeing an upward tick to the tune of around 2.5–3%. If you talk about, you know, lifestyle brands as well, Raymond, Aditya Birla Fashion and Vedant are the ones which are moving higher. Raymond is still 0.5%, and that's probably because of the exposure on above 2,500, which has a higher tax incidence. V-Mart, V2 Retail, Shoppers Stop, again, no major moves coming in on this aspect as well. ITC is seeing a strong move. Godfrey Phillip, VST Industries as well, trading in the positive. Consumer durables, again, it's very muted. Voltas is seeing a downtick of around 0.7%, whereas Blue Star, Havells, these are few of the names which are seeing an uptrend. So it's a pretty mixed trend, Tamanna, and I think few of the stocks which are not reacting, it's probably priced in because from 15th August to now, you have seen some strong moves that have come in already.
So, you know, market works with a lag, as in an advance. You are preempting what is going to happen, which is why one of your biggest gainers in the broader indices today is an Escorts. What you don't expect, that is what is going to react. I suppose the moving of so many items to 0% was not expected. That's why you'll see your HUL, Nestle, etc. doing slightly better. But as far as your consumer durables were concerned, this is something that was being talked about very, very deeply for the last several weeks. And that was a clear intent, right? That you want AC, TV, fridge, etc. to become cheaper. Having said that, is this an opportunity to pick those which are not reacting today?
Yeah, I would think so. Because see, some people might think that 22nd September it is going to get effective. So before that you lose sales and all those things. But I think overall, as you rightly said, you know, from 15th August this was predicted. So market has, going into the event, market has already bought. So some kind of profit booking you will see for next today or tomorrow. But I think structurally it is a very good thing for any consumption thing. Where the taxes have been reduced, and definitely as we saw, M&M, Escorts, Kubota, those are the big guys. And I think the hidden beneficiaries I'll continue to believe is tires.
But are they really hidden? Look at all the tire stocks today. I don't know.
I don't think they are up too much.
No major
Not
moves.
too much.
Not
Top
too much.
pick here?
So basically, I would go with, basically I would not like to comment because I don't have them in the portfolio as of now. Okay. So I would like to keep it as a theme. The tire is a, and see in tire also you will not see preponement of buying. It is not a festive thing which you are going to buy in festive. But I would say
the reverse argument will be it's not even a consumption boost. You will not buy a tire just because it's cheaper.
No,
you buy a tire only when you need it.
So here I expect margin benefits.
Okay, for the companies, from that perspective.
From
okay,
that perspective, yeah.
That's an important
because
point.
70% of the tire gets sold in B2C consumer aftermarket.
You mentioned that.
Yeah.
Thank you so much, Parag Bhai. Thank you so much, Vineet. Thank you so much, Shrikant, for speaking with us today. It's a power-packed morning, so we are trying to get you as many voices as possible.